traders, Raghee here, and in this update we're going to do something a little bit different, but I think it's something that you guys are really going to like, and I hope it opens up a whole new batch of ideas for you guys, and that is looking at these futures currencies in the commodity-based economies, the COMDOLs, and then also the related ETF, not only for the currency, but for the country. So now what we're trying to do here is use a futures first mindset, where once you understand what the macroeconomic stage is in, and we've talked about this reflationary environment for a very long time here in these updates. So we're in this reflation environment, which means inflation of these commodities. Well, we know what lumber has done. We know what energies have done, even though their energies are taking a little bit of a breather. We know what markets like lumber have done, and we know what markets like crude oil have done. I think lumber's gained, 50% in the last month. These are parabolic market moves. And for some traders, they don't want to get into an illiquid market like lumber. There's not a great ETF for it, although wood is okay. And for other traders, the expense of getting into an overnight position in crude oil futures is cost prohibitive. There is the USO ETF, and there are plenty of options there. But how can we take advantage of this narrative and put on maybe a little bit more of an out-of-the-box trade that hasn't gone quite as parabolic? And this is where in the futures room, and this is going to bridge two things that I do here at Simpler, and I'm going to give you a taste of both. And that is what I do in the futures room and the swing trades. Now, swing is trend following overnight trades. Swing trades are not the 3 to 5 day definition. This swing trade for me is a trend following approach. It's the kind of approach that I've used throughout my entire career. The first kind of trading that I did as a teenager was swing trading. Trend following. I'm a big fan of swing trading. I've been following the classic greats of trend following, and I believe it's one of those styles that anybody can use in their portfolio management, in their trading. It just has multiple applications. So yes, I'm very passionate about the topic of why you need to be a trend following trader. Not to mention, as we've talked about many times, trends are the most beneficial type of market environment for both pullback traders, dip buyers. I would consider myself one of those folks, and also momentum traders. Momentum traders are going to do even better once they learn how to identify great trend trading environments. Okay, having said that, in the futures room, we've been talking about getting long Canadian dollar. Even when the US dollar was very, very strong for a brief moment in time, what I was reminding everybody is, while the dollar is moving higher, find a currency that is able to outpace the dollar's strength. Enter one of the best currencies with the strength in lumber and crude, the Canadian dollar. So when the Canadian dollar would pull back, we would look at calls in the 6C, calls in the FXC, or just buying FXC, which is the Canadian dollar currency share ETF, or just buying 60 futures straight up. Okay? We knew that the path of least resistance for the Canadian dollar itself was very good. Now, I got to tell you, if you're a Forex trader like I am, we had even better choices. I don't want to go there, but take a look at this trend in Canadian dollar, Japanese yen. But what was the idea here? What is the shared setup? Let's buy Canadian dollar. Even against the US dollar, it's going to outperform, and it definitely did, and that's your 6C. All right, so that's the futures setup that I was focusing on. That's the futures setup, which has been fantastic. All right, so then what's the related trade? Well, in the Sector Secrets Mastery that I do, what we did there, that gets really interesting. What we did there was we said, all right, well, we could play FXC. There's no problem in that. And if you take a look at the FXC options, FXC, not to be confused with Freeport McMoran FCX, which I love too in this environment, but you can look at the FXC, and it's pretty darn liquid. The FXC, so a lot of our traders in both the futures room wanting to trade Canadian dollar, and in the Sector Secrets Mastery also wanting to trade Canadian dollar, will notice that the strikes in FXC are pretty darn liquid, and they're really, really inexpensive. How inexpensive? I'll give you an idea right now. One of the initial dips we bought was back on the 23rd of March. I'm not going to take you guys to, idealized situation. I'm going to take you to the very, very first dip we had, or the most recent first dip we had was the 23rd of March. Okay? And the 23rd of March for the FXC. Okay, so what did I pay back then? So what was I looking at? Just to give you guys an idea of how I set these trades up. All right, so on the 23rd of March, I could look at the April 16. No, I'm going to go out to May because that's going to give me some more time. And then I'm going to look at an at-the-money call. We bought the 78s. Those things cost me back then, I believe I paid 90 cents. 90 cents for those options. So these are very, very inexpensive. And then so as these 90-cent options are bouncing around, look, how easy is it to take volatility when you spent 90 bucks for an option? Or even in some of these situations, they were down in the 80s. Okay? That's what I'm talking about, 0.90. Your risk is very different than if you were buying a $9,000 option or a $19 option, right? So the type of pricing that I focus on in the mastery is designed to make things more affordable. And the type of pricing that I focus on for my futures traders, again, I don't want them eating up all their buying power. So we try to be conscious of cost. That's one of the easiest ways to take a smaller account and grow it. Focus on less expensive, not more expensive, riskier trades, but less expensive trades that you can scale in and scale out. So this is a really great example of taking advantage of the current macroeconomic environment, the strength in lumber, the strength in crude, and playing the Canadian dollar. And then, let me add one more piece to this. We play Canada. All right, this is where you can hear how excited I get about this. Totally geeking out. This is where it gets really good. Long Canadian dollar, or the options via the FXC, and then we get long Canada. So one of the recent trades we took in the mastery, this absolutely is working in tandem with the trade that we had in the futures room, and these are the wonderful overlaps. That was the trade. And actually today, we hit the first target. Again, very inexpensive options, trend following, and we scaled out, and now we'll see how high is high. Does anyone think crude oil is going to head lower? I don't. Does anyone think lumber is suddenly going to head lower? I don't. Who benefits from this? Canada, right? So think a little out of the box. Don't go chasing those parabolic markets. Think a few symbols down. What are some of the related markets that maybe a lot of folks haven't caught on to yet? And you're going to find some great opportunities in those little pockets, okay? Hope this helps. Think about the currencies, think about the countries, think about those currency share ETFs, and take advantage of this environment, gang. I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me